Hello, everybody. At this time, we are talking about a service charge. A service charge, also called a service fee, refers to a fee collected to pay for services that relate to a product or service that is being purchased. In other words, a service charge is additional charge for the service provided with the purchase of a product or service. For example, a service charge is typically added to your bill in a restaurant to pay for the waiter or waitress who comes and services your table. And then we move to types of service charges. The first type, hospitality service charge, included in restaurant, hotel, or catering bills for customer service. And then second type, e-commerce and subscription service charge, charges for delivery, packaging, or platform services in online shopping or streaming platforms. And then third, accounting in banking service charge, account maintenance, transactions, ATM, or overdraft fees. And then fourth, transport service charge, charges for baggage handling, ticket revision, or priority seating in airlines or railways. And then fifth, real estate service charge, charges for property maintenance, security, and standard maintenance in apartments or commercial properties. And then six, utility service charge, additional electricity, water, gas, or telecom charges. And we move to advantages of service charge. The first, it allows businesses to keep providing excellent customer service and products without increasing the price of the products. And then second, the provision for obtaining service fees creates healthy competition and motivates the business to provide the best of its services to the end customers, thereby increasing the business revenue. And then third, there are no hidden costs charged to the customers. And fourth, it enables business owners to raise the wages of employees. And then what is the difference between a service charge and a surcharge? The first, service charge. A service charge is added to the overall price of a service or product to cover additional expenses incurred by the merchant providing it. It could be the cost of delivery or of packing goods and may be either a single flat rate fee per transaction or a percentage of the overall cost of the goods or services. And surcharge, a surcharge is an amount which is added to a bill when the payment is made via a credit card. This covers the payment processing fees associated with handling credit card payments. Another fee sometimes charged by a merchant known as a convenience fee. This is if a merchant accepts a payment outside the channels they normally offer. If a customer wants to pay over the phone rather than in person, for example, a merchant may charge a convenience fee no matter which payment method they use. And then we move to purpose and importance of service charge accounting. Service charge in accounting is vital as it accurately reflects the cost of services provided. It ensures companies get the expenses incurred while serving customers and generates revenue to help cover overhead costs and improve profitability. Service charges are essential for financial statements as they record and track income from services. This data is key for making sound business decisions, evaluating performance, and assessing profit. Service charges are significant for budgeting and cost management. Businesses can use them to determine proper pricing, considering labor costs, materials, and overhead expenses. This helps them set prices that cover costs and make profit. And then, how is a service charge different from a tip? One common question is how service charges differ from tipping. While both aim to reward for their hard work, there is a key difference. A tip is optional and discretionary, while a service charge is mandatory and automatically added to your bill. Tipping allows you to decide how much extra to give based on your experience, while a service charge is a fixed percentage set by the establishment. So, next time you're deciding whether or not to tip, check your bill carefully. If a service charge is already included, tipping might be redundant. But again, this varies by place and region. And then we move to factors affecting service charge. The first, level of service provided. The service charge is greatly affected by the level of service. Customers want it to be high quality and efficient, whether at a restaurant or a customer support center. If the service is good, then people tend to tip generously or pay a higher service charge. And then second, cost of providing a service. The cost of providing a service is key to the service charge. It involves many expenses to give the service to customers. Knowing this cost is critical for businesses to set the right prices and stay profitable. And then third, customers base usage. The customers base and usage can heavily influence service charge. All about volume of customers. The more customers, the more cost. Higher customers volume means lower service charges. Frequency of service usage. Customers using services often get down and packages. This boosts loyalty and revenue. I think it is enough. Thanks for watching.